Why do people think reverse mortgages are bad? Um, this is a pretty common question we get all the time. I would say misinformation. Number one answer, misinformation. A reverse mortgage is just a tool. If used appropriately and in the right circumstances, it's a great tool. It's a fantastic tool, one I believe very, very strongly in. If used inappropriately and incorrectly, it's a terrible tool. Now, I will say, having done reverse mortgages for over 20 years, there is a very factual basis on criticisms to reverse mortgages. In the past, prior to 2017, the old reverse mortgage was a lump sum distribution. You took out all of the money right away. The loan to value ratios were a lot higher. So you took out all the money right away and accumulated interest on all of it right away. It didn't take long before it ate up all of the equity. So that old product, kind of, there's that stigma to this day that hasn't happened in 7 years or longer, um, that people think they're going to eat up all of their equity. That's not the case, right? I can make an argument, the same argument about a 30-year fixed loan, right? I'd say that's a terrible product. If you think about it, you're borrowing, $200,000 and you're going to make payments on that over 30 years. Well, if you count up all of the payments you made over 30 years, you're going to pay back more than double what you originally borrowed. How's a 30-year fixed a good idea? Well, you got to put it in context, right? You're still acquiring an asset. That's why a 30-year fix makes sense. You're acquiring an asset, and the asset's going to appreciate and depreciate over time, over 30 years. Same thing with the reverse mortgage. If you look at just one half of the equation where you're borrowing money and interest is accumulating, and at the end you're going to owe more than you originally borrowed, on the surface, that looks like a bad idea. But you have to look at the whole equation. You still own the asset. The asset's still going to appreciate and depreciate in value over time as well. So it's most of it's misinformation. There are circumstances that a reverse mortgage is a bad idea. First and foremost, the first thing that I ask, or one of the first things that I ask all of my clients, how long are you going to be in the house? If you're going to be in the house for more than 3 years, then a reverse mortgage probably makes sense in most situations. If it's short term, don't do a reverse mortgage. This is a terrible short-term loan. Over the long term, it works out. But if it's going to be a temporary loan, then it's a bad idea. I think that the old product, what it is today, I hate to use the phrase the new reverse mortgage, but really the post 2017, this is an entirely different product. It is a whole lot safer. It's relatively improbable. I'm not going to say impossible, but it's relatively improbable for a borrower to eat up all of their equity. The loan to value ratios are smaller. The interest rates aren't as high as they were before. So the chances of it eating up all of the equity are relatively minimal, but it's still a possibility. Back then, it was a much higher probability. So I think it's a fair criticism of that old product. I think it is a gross misrepresentation of the new reverse mortgage.